Hello everyone, and once again welcome to my channel Economics Unplugged with Praful Raj. My channel is about the insightful conversation with economists and professors about the Indian economy. Today our discussion is on gold in India, where the precious metal holds a significant culture and economic importance. As a symbol of wealth and prosperity, gold is proudly displayed at various occasions in the country. As the largest importer of gold, India sees an annual inflow of around 800 to 900 tons. The metal features promptly in various aspects of Indian life, from offerings at temples to the traditional dowry system of weddings. Before we start this discussion, I would like to present some facts. In 2014, the Sri Padma Swami temple in Kerala opened its vault, revealing an astonishing figure of $20 billion worth of gold. Today, the value of this treasure is difficult to estimate, as both the quantity and the value have likely increased significantly. Second, as of March 2022, retail investors held stock worth around 20 lakh crore, and the mutual fund managed asset worth around 40 lakh crore. The total sum up around 60 lakh crore. However, according to the World Gold Council, in 2019, it reported that in India, the privately held gold is amounted to approximately 24,000 to 25,000 tons, which has a value of around 108 lakh crore to 113 lakh crores based on the rate of INR 15,000 per 10 grams. So today we will delve into the positive impact of this abundance of physical gold has on the Indian economy. So I'm honored to introduce our esteemed guest, Dr. Madhav, the chief economist at Manappuram Finance. Dr. Madhav has an impressive career, has served as a senior economist at Aditya Birla Group and as a lead economist at ET Prime, the digital venture of the Times Internet. Additionally, he has also held various positions such as senior economist at Bank of India, contributing his expertise to various departments such as strategy, treasury, and the risk management. Thank you so much, Dr. Madhavan, for joining us today to share your valuable insight on this fascinating topic. So we truly appreciate your time and your expertise. So with that, let's go back to what happened in 1991. So as we all know that we had a crisis of balance of payment in 1991 in India. So in short, we can also say that the country's import cover fell to just 2 weeks. It means that after 2 weeks, government will not have enough money to pay for imports. Sorry. So to get out of this situation, government pledged stocks and gold stocks and secured emergency funding from the international situation. So the question here is that how exactly the Indian government, took advantage of having the gold stock to get out of this situation.
Yeah, very pertinent question, Kuful. And at the outset, thank you for having me for this show. I'm really delighted to share my views. Of course, what Kuful asked right now, it's a very pertinent question. You all would know that we had a very acute crisis of the balance of payment in the early part of the 90s, to be precise, in 1991. And we had to pledge our gold holdings as a collateral to secure funding from the IMF to get out of the crisis. In fact, it was a condition which was imposed by the International Monetary Fund. Now, it's very interesting that you all know that gold is something which is very dear to all of us. You, me, anybody in the rural areas,
yes,
people in the middle class, they all have very keen interest in gold. We have not just a liking for gold, it's also something which is culturally very strongly embedded in our psyche. In the sense, gold is an asset class which has been passed on to us from generation to generation. And I would love to call it as a sacred inheritance. We have been inherited that kind of wealth for the time immemorial. Now, you and me can pledge or keep our gold with a bank or a non-banking financial company, and against that particular gold which we are pledging as a collateral, we are eligible to get a gold loan.
Yes.
In fact, which means we are eligible to get a loan for any purpose against the gold we keep as a safety with the bank of a non-bank institution. Similar thing worked when the country as a whole had a crisis in the early part of 90s. So what I'm saying is what is true for individuals like us in that particular point of time, it became true for the country also. The country, we have a huge treasure trove of gold, huge. It's very interesting to note that what is the real worth of gold which we have at this point of time, or for that matter, any point of time, it has not been easy to calculate. There is no perfect study which says that we have this much amount of gold. There are varying reports which state that we have the gold hold for individuals ranging from 30 to 40,000 tons. And this doesn't include what is there with the Reserve Bank of India and the Temple Trust.
Yes. I think with one of the World Gold Organization World Report, it says that in 2019 we have approximately 25,000 ton of gold, which approximately values around 113 lakh crore, based on, if we calculate based on a 50,000 INR per 10 grams. So but that World Council also says that they have also estimated figure in 2019. Yes. Continue, sir.
Yes, in fact, I'd like to intervene here. It's a study which may not be based on 2019, but it would have been dated a couple of years or 3-4 years back to 2019. So if we extrapolate this 25,000 tons, it would be something like, you can even say it will be around 35,000 to 40,000 tons or even more. Anyway, that's just to give you an information of the extent to which we have gold holdings. So gold has some major attributes. It's very liquid. As we said right now, it's a very good collateral, because if somebody doesn't pay back the loan, you can easily sell whatever gold that person has pledged with you, and you can get back the money. Similar thing worked when IMF wanted us to keep our gold, because they know that if they give us the loan and if we default, they can easily sell their gold and they can get back even if we default. So this is in short what happened. We had a balance of payment crisis, as Praful rightly said. The funds were very short, and our fund situation was such that we had only foreign exchange reserves to meet just 14 days of imports. So we pledged our gold, and the IMF gave us a loan. And gold was a collateral. This is the background of it.
So if you remember, like, if you have any number, how much gold we pledged to IMF, approximately any number?
I have to. I'm not very sure how much gold we pledged with IMF. That number we have to.
No worries.
Find out.
Coming back to this, like, we know that, as you clearly mentioned, that it is culturally, and as well as it's everywhere in the part of India. Like, everyone has a gold in their house, from maybe not the people who are below the poverty line, but even they are considered as a poor and they have a minimum income from them to richest person have gold. So basically government has some regulation to control the import of gold, which is not good for economy. But still, if you could explain, like, this asset is why it is still important, and how it is good for Indian economy, for its growth story. Because definitely, if we have so much of gold and it's still getting imported, probably around 800 to 900 tons every year in India, so there must be a reason behind it, why we have so much, how it must be adding some economic growth, to how it is actually helping Indian economy, being an important asset to helping the economy to grow.
Yes. So as we know, one reason but why gold is being imported is that we have a deep cultural affinity towards it. Secondly, let me say that though we hear a lot of stories that not stories, I'm wrong in using the word stories. Though we hear that credit growth is very robust in India, and we have made a lot of penetration as far as uh, reaching the last mile is concerned. For instance, we have opened Jan Dhan accounts. We have achieved quite a lot in terms of financial inclusion also.
Yes.
But what happens is that if you look at it very closely, there is still a vast segment of population which is still unpenetrated in India. Now, how do I explain it? Now, it's possible to explain it with a very simple metric. In India, the organized sector is hardly 10% even now. Almost 90% of the economic activity in a country like India happens in the unorganized sector.
Yes, correct.
When I say that, it also means that probably the GDP in terms of value added or in terms of the figure, the Central Statistics Organization, which put out every quarter on the GDP, may not reflect the true picture also, because a lot of activity takes place in the unreported, unorganized sector. Similar thing should be brought. Whatever is happening in the unorganized sector should be brought to the formal sector. So what do you mean by formal sector? When you say formal sector, it means people should come to banking and non-banking financial sectors. So as I said earlier, 90% is still unorganized. So what are the implications? The implication is that if you see a metric called a credit to GDP ratio,
Oh,
this
yeah.
credit to GDP ratio, which simply means the credit exposed as a percent of GDP, it's only 51, 52% in India, 51 to 52%. And this has been languishing at this particular level for the past decade, or if not more than that. But if you compare with countries like China, US, Japan, South Korea, or Singapore, this ratio is more than 100.
Yes.
It means that in India, we have not yet been able to penetrate the unorganized sector. And this unorganized sector, which consists of a lot of rural population, etc. They are the people who have the huge amount of gold. And if we are able to monetize that gold and bring that to the formal sector, this segment will be benefited in a very big way. Now, I want to put one thing very clear at this point of time. When you say monetization, usually we mean, or in the general parlance, as it is understood, it just means bringing gold to banks or non-banks as a deposit. But that is not the only thing about monetization. It's an incomplete viewpoint. Monetization should also mean depositing whatever gold you have with the financial institutions, and also being able to take loan against it.
Yes.
Only then the process of monetization is going to be complete. And why do we say that we should bring that to the formal sector? The reason is now a lot of this pledging of gold is actually happening in the unorganized sector with the money lenders. They charge very huge rate of interest like 40-50%. But if the same amount of gold is pledged with a bank or NBFC, the rate of interest is quite less. Of course, NBFCs charge much higher than bank, but still it is much lesser than what is being charged by the pawnbrokers and the money lenders.
Yes.
So, in a nutshell, how the gold stock benefits the economy? It benefits the economy by being able to provide more credit facilities to the people against the gold which they are able to pledge with the banks or non-banks. So that increases the credit creation, credit level. When you have more credit, economic activity expands, and it will create a boom. And just one more point before ending this answer to the question. This gold loan is given not only to individuals, even small and medium enterprises, the micro, small, and medium small industries, which also are in the need of emergency funds. They can also avail of gold loan. So overall, it's good for the economy.
So basically, what you just mentioned that, and we'll come to the another question related to this monetization. So basically, it means that if we have gold, it's a gold, it's better to go to bank and give them, and maybe take some kind of loan or use it as a credit for our credit, so that we can use that money for our business or whatever purpose, which indirectly lead to the economic growth. So this is why gold is important asset.
Yes, and I'll tell you one more instance. Suppose you take a home loan.
Yes.
And let's say you want a 100 rupee loan, and typically banks give you up to 80 to 90%. They don't give you the full loan. And let's say you're instead of a 100 rupee loan, the bank is taking your mortgage deed as a collateral and giving you 80 rupees. Now
Yes.
you still want 20 rupees. That you can meet if you have some amount of gold with you. You can pledge that gold and take some gold loan, and that will supplement your shortage of the housing loan. So you can extrapolate, and you can find several ways in which your gold can help you.
And also we have seen that the stability in the gold price is quite more evident compared to other marketable securities or any stocks that happens in the market. Okay, so coming to this point of monetization, so if we remember that in November 2015, government introduced this program in which the government aims to mobilize the gold hold by households in the institution to country, so basically aim to mobilize the ideal gold held by households and institution in the country to reduce the demand for the physical gold and putting that in a productive use. So like, how does government uh, gold monetization scheme actually affects the economy, and does the government is achieving its objective of you know reducing the demand of physical gold by the households?
Yes. Actually, the government introduced a gold monetization scheme in 2015, and there was a gold deposit scheme also. Gold deposit scheme, even now it is in vogue. It helps you to capture not just the upside, if at all there is any, in the gold price, but it also gives you an interest at the rate of 2.5% every year on the amount of gold you are placing with the banks.
Yes.
So this is very good in from the point of view of the fact that you're benefiting not just from an upside in the gold price, but you're also benefiting from the fact that you're getting an interest at the rate of
Regular interest
2.5%.
payment.
Yes, 2.5% interest every year, and that's going to be a huge gain because you will appreciate that gold price is denominated in rupees in India, and historically the rupee has been depreciating at the rate of 2 to 3% every year against the US dollar. So that effect of the rupee depreciation against the dollar will also indirectly push up the price of gold, and you're getting an interest rate on top of this increase in the price of gold. So
Yes.
this instrument can actually, if marketed properly, it can gain a lot of traction. But unfortunately, what has happened is the government has not been really successful in mobilizing the extent to which they intended. Uh, the extent to which they intended that the gold should come in. The basic reason is because this scheme somehow has not been marketed very aggressively by the banking sector. But if that is being taken care of, then it should be a very good thing in terms of the fact that it can be a game changer as far as ensuring gold monetization in a more accelerated manner. So that's how it can impact the economy by channelizing the ideal gold. But as I said earlier, it has been marketed properly. It's not happened in the desired manner.
So basically the government have not achieved achieved its motive of uh, reducing the level of physical gold demand in India. But as you mentioned, that it's a marketing problem kind of thing, that it has not reached the people it should reach. But one question arises that that banks are actually get benefit because of getting loan in terms of physical gold, because they are also, banks are also uh, reduces it risk by giving loan by taking the collateral, gold loan by taking collateral, right? So then why bank
Yes.
is not advertising uh, this scheme, so that instead, if you come to the bank for the loan, it's better to for from your gold monetization scheme. Why they are not doing that? What's the catch here?
So here it's a very good question. The answer here is not very straightforward. What happens is in India, 70% of the banking sector is dominated by the public sector banks.
Okay. Yes.
So what happens is, Kapil, can you stop recording 1 second?
Yes.
Is that it's not a very
Yeah.
the gold marketing by banks is not happening actually because it's not a very straightforward thing. 70% of the banking sector in India is dominated by public sector banks, and they have to do a lot of businesses, right from marketing insurance products to catering to the small and medium enterprises, and they also have to do financial inclusion. They have to do NPA recovery. At the same time, they have to do housing loan, then they have to do mudra loans, and the amount of people for all this, the manpower is very limited. So ultimately, what happens is that there are several products which are getting sidelined because they really don't have enough personnel or enough manpower to do these things in the desired way. It may look a bit odd, but that's a fact. It's not because they don't realize the value of a gold loan. And there is one more reason which we should put it across very straightforward. The fact is that it all looks very good on paper when we say that you can get a loan very easily by plugging
Yes.
your gold stock. But there is also the fact that if the gold which is being deposited with the bank, or it is applicable to non-banks also, if that gold turns out to be spurious, or let's say if that is smuggled gold, or if the appraiser of the gold is not able to appraise the value of the gold properly, and if he is not able to detect whether it is fake gold or real gold, then the banker or the person responsible will be in trouble in course of time if there is an investigation. This fear is also lurking deep into the mind. And you know what happens in a public sector setup? If even if it's not our fault, even if there is a slight negligence, which can be quite human, it can be quite natural, but it's very difficult to get a protection. You cannot get away by saying that you have done in good faith. The long arm of the agencies, the investigating agencies may be after you. You don't know when. It may be after your retirement also. So
Yes.
this kind of fear is also lurking deep. So in short, these are the factors why the product is not getting marketed properly. Secondly, they are marketing. It's not that marketing is not done also, having said this, but there is stiff competition from all the banks put together. These PSUs and private sector banks, they are fighting with each other, they are competing with each other to grab the share of gold loans, and they are facing stiff competition from NBFCs also. So all these factors put together, this is why the marketing efforts, you may not find it reaching the desired way. But yes, the fact which I sought out earlier, that lack of manpower and the fear of purest gold and all, it plays a very important factor.
Yeah, I mean, there are real life situation problems that, and also as you earlier mentioned, that it's in the government bank there are like thousands and lakhs of books of works they have, but yes, the manpower is not to the extent it should be. And also because it's kind of like there are hundreds and hundreds of scheme run by the bank, so this is also just get a name of one scheme and being just get being a scheme instead of actually getting the productive use of that scheme. So yeah,
Uh,
saying some things.
yeah, I didn't get you what you said.
No, what I mean to say that it remains just a scheme. There is like, there are already hundreds of scheme in the bank, and it's
Yeah.
just one more scheme is added in the bank.
Yes, yes.
It's kind
No,
of.
I'll give you a sense of the manpower thing. For every branch in a private sector bank like HDFC Bank or ICICI Bank, there are 20 to 25 persons who are in a per branch employee. But the same per branch employee count, when it comes to a PSU bank, it's 10 or slightly less than 10. So virtually you have half the half the employee per branch in a PSU bank compared to a private sector bank, which is really putting them in a lot of hardships.
Lot of pressure, right? Even less than
Yes.
50%, probably less than 50%.
Less than 50% of what is available with a private sector bank.
Private sector bank, yeah. Coming with that, that as we know that that bank uses this gold loan, and the government also uses not a loan but a gold is to hedge against inflation. Okay. So if you could explain a real scenario like how the banks and governments are using to hedge against inflation.
Usually, the gold is used as a hedge against inflation by individuals, like retail people, uh, like you and me.
Okay.
Usually, it is done by the common man. So, I'll give a very good way of understanding it. If you track the rate of inflation over the past 30 years and compare it with the returns given by gold, you can see that in India, the average retail inflation, which we say the consumer price inflation, has been around 6% on an average. I'm telling on an average
On
for,
an
for the past 30 years.
30 years. Okay.
But gold has given you a return of almost 7 plus percent. over the last 30 years in India. So gold has handsomely beat inflation by almost 1% in terms of the return for the past 30 years. Of course, there would be variations in between, but I am saying over the past 30 years because then that would smoothen out the volatile components. So this
Yes.
is a classic example of how holding gold for a medium or long-term period of time can help you beat inflation. And as far as banks are concerned, of course, for them it's only collateral. But for the central bank, which in our case is the Reserve Bank of India, gold is not actually used as an inflation. It is actually used as a hedge against exchange rate risk.
Exchange
In
rate.
fact,
Yes, I was coming
yes,
to that
because
point. Yes, how?
exchange rate risk. How it's very easy to understand. We have the foreign exchange reserves with the Reserve Bank of India, which is denominated in US dollars,
Yes.
and some part of that is with gold. And this foreign exchange reserves, which is around 530, it's hovering between 530 to 600 billion US dollars. The value of that reserves gets volatile depending on the US dollar and rupee exchange rate. So there's some amount of volatility and fluctuation in the value of forex reserves which we have. And that fluctuation can be managed to a certain extent if we have more and more gold stocks. Not just Reserve Bank of India. In fact, we are the 8th largest holder of gold, our central bank, if I'm not wrong. There are other central banks also which hold gold as part of foreign exchange reserves. Typically, it is to beat the exchange rate fluctuations. But whereas, as far as inflation is concerned, it is used as a hedge by the retail common man, like you and me.
So just for the clarity for the audience, so basically RBI has a reserve, foreign exchange reserve approximately around 535 billion dollars, which ranges in last 1 year, it's ranging from 500 to 550 billion dollars. So you are saying that 530 billion approximately dollar as of now, if say, so it's a mix of the foreign currencies as well as it also has gold, right? So the number of foreign currency is it the all the five SDR currency, or there are other currency also involved in that?
So foreign exchange reserves typically bulk of it 60-70% in dollars, and then we have it in the pound sterling, yen. Pound sterling is there, yen is there, euro is there, Swiss franc is there. So there are several the currencies in terms of which we hold our reserves, and gold also forms around 10%.
Okay, so basically what I am understanding that if the gold price goes up and all, it tries to compensate
Yes.
the depreciation that happens in rupees in terms of
Yes.
other currency.
Yes. But still, typically, 60% and above is still held in US dollars, but gold share is 10-11%. To that extent, it helps.
Okay. No, so we have seen
But
that.
now,
Yeah.
but now the accumulation of gold has started increasing.
Started
Of late.
increasing again. You are saying that the government has started increasing the stock of gold. Why so?
Not government, in fact, I would say the Reserve Bank of India, central bank.
Yeah,
There's
I mean, if you talk about, it's a Reserve Bank of India, not the government. Yes, correct.
yeah.
Yeah. So why government of India, sorry, Reserve Bank of India is trying to increase the gold stock?
They're increasing the gold stock typically because the need to hedge against exchange rate risk is there. Suppose the dollar is fluctuating. Suppose the Federal Reserve is hiking the rate of interest very sharply.
Yes.
Then the rupee may depreciate, and vice versa. It can be other way also. The dollar may depreciate also. The rupee may suddenly appreciate. And RBI typically is a central bank which doesn't want too much of a volatility. They don't want either too much appreciation or too much depreciation. So they want things to be
Stable.
in a controlled way. That term volatility is something which they don't want. So to hedge against such exchange rate fluctuation, they have this gold stocks.
Okay, so
Gold.
basically you're saying that yeah, they are increasing the percentage of gold hold in overall foreign reserve exchange.
Yes, it
Yes.
won't fluctuate that much. Of course, it doesn't mean that gold is not volatile. It is, but it's not that volatile as you see in terms of currency, how the currency fluctuates.
And also coming back to this gold rate too much of a household things. So coming back to this question that like we know that gold plays an important role in Indian current account deficit and balance of payment, which is what happened in 1991. But also one thing, do government have any data regarding the extent to which people in middle class sell or use gold as a collateral for loan during the times of financial crisis, given during maybe 2008 or during the COVID, what happened? So like we all know that it is used as a security, as a collateral. We have that confidence on the gold. So do actually we have some number facts proving that during the financial crisis or any kind of financial strain to any household, they go and sell gold, not on an informal part, as per se my question is, but on a formal side, like how frequently and what is the significant, any significant number related to it?
The best way to answer your question is there are around 5 lakh crore of gold loans outstanding as of now. So that answers your question. What is the extent to which gold is used as collateral? So when you say we have 5 trillion of gold loans, it means that's the extent to which gold loan is provided against gold as a collateral. Now the loan to value ratio typically ranges between 70 to 80%. So when you say gold to value ratio, gold loan to value ratio, it means even if it's gold, you won't get full amount of
Full
loan
100%, yes.
equal to 100% you won't get. So you can easily say that around 6 to 7 lakh crore gold, 6 lakh crore, 6.5 lakh crore gold is what would have been pledged. And mind you, it's all in the organized sector. What data we have is tip of
Yes.
the iceberg, let's say, because this data captures only what is the activity happening in the organized sector. There'll be an equal amount of stuff which is happening in the unorganized sector also.
As you said that this 5 lakh crore approximately, which is outstanding gold loan and used as a collateral in the banking system. So, and this is across only formal sector. So what do you
Yes.
by the, so it means that informal sector, what I am understanding from it is that if I have a gold and I might not have a purchase, purchase invoice or something like that, or the gold has been inherited by me from my for grandfather or grandfather. So does those gold also use as a collateral, can be used as a collateral, or the bank has some kind of other process or scrutiny whether it is a genuine purchase or not?
No, what I'm saying is not that. What I'm saying is that what is being reported, this 5 lakh crore, it is actually what is being advanced as a gold loan by the banking or non-banking sector.
Okay.
Combined non-NBFC and banking sector maybe around 5 to maybe you can say 6.5 lakh crore. But the same kind of activity, that is pledging gold and getting a loan, it is happening in the unorganized sector also with money lenders, pawn brokers, etc., which we discussed earlier.
Yes.
That data is not being captured. And considering that 90% of the activity is still taking place in the unorganized sector, you can extrapolate, which means that the 6.5 of, let's say 5 to 6 lakh crore, which is happening, it's only 10% of what is actually happening. You can even say that. So if you extrapolate it to include unorganized sector, which is not a very scientific way of capturing the data, but even then we can say that around 50-55 lakh crore would be the actual transactions of lending against gold in the country if you capture the unorganized sector also. But of course, it's a very crude way of saying it, but it's safe to say that this is the kind of stock transaction which is happening. Organized sector around 6.5 lakh crore, maybe 5 to 6 lakh crore. That's a better way to put it. And unorganized sector, maybe this is only 10% of the unorganized sector. So total will be around 50-55 lakh crore.
So one very basic question related to gold. So as we know that, as while we are discussing, we don't have any exact number, because like, and there is, we cannot do all the time extrapolation because there should be a scientific way of doing the extrapolation also. So what do you think government or any such organization in government is trying to keep that, to bring this data, gold data on track? Any effort is being done by any banks also, PSUs or government like that, so that maybe a decade later we will have near to 90-95% of accuracy in our numbers in terms of gold?
So right now, we don't have much of a success in this. And to add to this problem, there is also the scenario of smuggled gold. It is estimated that around 200 to 300 tons of gold is getting smuggled every year. And that itself is around, let's say, if you put in terms of numbers, it would be around 1 trillion or so.
1 trillion, yeah.
That's also another problem which is compounding. But smuggling of gold can be avoided if you reduce the tax rates and all. Like a simple measure like reducing the import duties on gold, which unfortunately right now it's at a higher level, it's in double-digit level. If you reduce import duties on gold, smuggling can actually come down. But the only way the accuracy can be achieved in this is trying to bring the unorganized sector to the organized sector. But that cannot be done by targeting gold to move away from the unorganized to the organized. It can be done only by other means, like strengthening the GSS system, which will help track the other businesses which is happening in the unorganized sector, so that whatever activities are pursued by businesses, of which gold is also one part, that also automatically comes into the system. Once several things fall in place, once the GST network is reaching its arms in a very big way, once the government gives incentives for the unorganized sector to come to the banking sector,
Banking sector.
like let's say loans at a very low rate of interest or
Tax
mudra loans,
tax
etc.
rebate, kind
Yeah,
of.
rebates, etc. So you can't target gold alone as a particular specific commodity to move away from the unorganized to the organized sector. It can be only a result of, it can be a collateral result of a larger effort to bring the unorganized sector as a whole to the organized sector. That measure is actually happening. There are a lot of measures which are happening to bring the unorganized sector to organized, but it will take a long time because being the
Yes.
state we have right now in India,
Considering our population, it will take some time, quite some time.
it will take a lot of time. Yes.
One last question related to this, as you mentioned that if the tariff will be reduced, the smuggling part can be reduced, import of gold to the smuggling. But don't you think it will increase the current account deficit, which has already been high in India? What?
See, I have a bit different take on this because though it has been very easy to point out fingers for the current account deficit to the gold, the bulk of the deficit is due to energy imports.
Yes,
You have
oil
oil,
and oil.
fossil fuels, coal, edible oils. Edible oil is not energy, but
Yes.
we import a lot of fuel and coal and other fossil fuels. That constitutes a bulk of our current account deficit. Actually, if you look at it, of course, we import around 2 to 3 billion gold worth of gold every month, but it pales in comparison to what we import by way of energy. The energy bills are much huge. So somehow I don't agree with the fact that, or with the view that gold is a major culprit to our current account deficit.
Okay, got it. I mean, to close this conversation, if you say like, how can we improve the awareness of this gold monetization scheme, or anything that you feel that as an we should know that how gold is important. What's your opinion overall on gold in India, kind of?
Yes. So the best way to catch it is in terms of returns. So this gold monetization scheme, for instance, it gives you a return of 2.5% over and above the increase in the price of gold. And we should make earnest efforts to educate the public of the kind of returns gold has given us over the past 30 years. So as we mentioned earlier, over the past 30 years, gold has given typically a rate of interest of around 7% average, which beats inflation by almost a percentage. Of
Yes.
course, if you compare it in terms of equity, it would not have beaten equity, but it certainly beats inflation quite handsomely. And you should also educate the public about the fact that the gold loan market is still very active, very attractive for them. In fact, if they pledge the gold, they can get a gold loan very easily compared to the hassles or the time-consuming factor which is involved in other kinds of loan products, which includes a lot of paperwork and you have to make a lot of errands to the bank branches, etc. But in case of a gold loan, it comes very easy. It takes a very little amount of time and very less amount of days and even less amount of paperwork. So these this is a very, very important factor. So just give an example. If you are a person who is earning a daily wage, if you have to go to a bank and take a normal loan, let's say housing loan, you have to make three, four visits to the branch, and that will probably deprive you of 3, 4 days of wages if you are a daily wage worker. But typically, if you want a gold loan, you can get in minutes. If you go to an NBFC, you can get in minutes. If you go to a bank, it will take still longer.
Sure.
So this is how it saves a lot of time, effort, and even it improves your liquidity also. And it is it's the only product where you have the trinity. I would call it the trinity: easy liquidity, a hedge against inflation, and a good collateral. All three factors converge in this particular commodity called gold. But somehow this kind of awareness is not really it's not really happening even at this juncture, despite the fact that we have huge.
Yeah, hope I mean, slowly things are changing in India, so probably we'll also get to know more about the importance of gold in a formal sector. Of course, we know the importance in the informal sector that keeps happening, and for centuries it happened. So here, sir, we come to an end, and I would really thank you for joining this and sharing your knowledge and insights on the gold. So I hope our audience likes it, and they would have now probably a kind of more in different views, positive views towards gold. So thank you so much, sir.
Thank you, Popul. Nice. Really enjoyed your conversation.